Hello, everyone. Rick Albert here with American Real Estate. I have Jimmy Lewis, insurance agent with myiQuotes.com, as well as the incoming 2025 president of the San Fernando Valley Insurance Brokers Association. And we're going to be talking as part of this short series about the fires and what to do next. So thank you, Jimmy, for coming on. I really appreciate it.
Thank you, Rick. This is great that you're working to provide value and resources for our community, which is so heavily impacted right now.
Yeah, and this is somewhat unprecedented, right? It's just like I was talking to someone this morning, and like this is kind of a reminder of like the Northridge earthquake.
It is. It is, I don't have the exact numbers, but I'm venturing to guess it is much more widespread as far as the
Yeah,
damage than the Northridge earthquake. I don't have the exact numbers,
sure.
but it seems like the number of total losses between the two major fires. I mean, there have been dozens of fires, but the
Yeah.
two major being the Eaton fire up in the Altadena, San Gabriel Valley area, and the Palisades fire, which has affected Santa Monica, Palisades, Topanga, Malibu, Calabasas, and beyond. Um, in excess of 10,000 structures lost, even more damaged. And I think that those are preliminary. I think those numbers are only going to get worse.
Yeah. No, for sure. I looked in the multiple listing service. There was one closing the Friday before the fires in Pacific Palisades, and I was just like, that must have been a rough. You just closed, and it was like a $4 million home, and a few days
Yeah.
later, it's gone.
There was a video of someone, I don't know if it happens to be the same one or not, but there's a video going around on social media about someone who just moved into Palisades. I don't know if they owned it or if they
Yeah.
just happened to lease a place, but they moved in, I think, over the weekend before the fire started. So yeah, I mean, the stories are countless and are devastating. Being an insurance broker, that's been the only thing that I have been dedicating all of my time to over the last week and a half, which is having conversations with insureds, numerous insureds that are experiencing total losses, and countless others that are dealing with evacuations, or maybe their home is there, but they're in a wasteland. There's a community of in Malibu that I insure several families, and about 75% of the neighborhood is gone. And so I have one client up there who their home is standing, but everything around them is burned, including their yard, damage to the house. I mean, it's incredible, and the emotions, and it's a lot. It's a lot right now.
Yeah, so we're going to dive into it. I do want to preface that, and correct me if I'm wrong, but every insurance company is different in terms of their process and coverage. So we're going to be talking on a very high level. But if they really want granular information, they need to contact their carriers. Does that sound about right?
Yes, the only caveat to that would be is if you have an agent, if you work with a
Mhm.
carrier that an agent helped you to secure your coverage, try contacting your agent first.
Okay.
If you have questions, agents seem to be able to answer a lot of questions. If you have a loss. A total loss or a significant loss, or you've been displaced, yeah, go ahead and file that claim with the carrier. But I'm finding that the agents on the ground are resources of information and able to help get you pointed in the right direction.
Okay. Perfect. That's really good. So let's start with what has been as soon as these fires started and everything that's going on, what has been insurance companies' initial reaction besides like, oh crap?
Yeah, well, these insurance companies, they deal with this is what we call a catastrophic event,
Hmm.
catastrophic weather event. Um, these type of catastrophic events happen every single year. Not wildfires like this in our own community, but there's tornadoes, hurricanes, hailstorms, really big events that happen every single year. So this situation is unique, but it is not new in the scope of handling a catastrophic event where lots of people are affected. So there are plans in place. Speaking about here, twofold. So the carriers do two things, right? Up front, they initially activate moratoriums. And what that means is policyholders in affected areas, you cannot change your policy, you cannot modify your policy, you can't lower your deductibles, you can't add coverage. I've gotten a lot of calls to, hey, can we double my coverage? House hasn't burned yet, but just in case. The carriers
Mm,
are familiar with that, and so they do lock things down so that existing policies in impacted areas cannot be adjusted. And also you can't write new policies. So real estate closings, for example, Rick, in your world, are affected because insurance can't be placed for a pending closing if it's in one of the impacted zip codes. And these carriers usually monitor or make these adjustments from a zip code to zip code basis. So that's one side and not the fun side. The other side is the claim side. What are the carriers doing? Well, several things. One, most, if not all, carriers have 24/7 claims support lines. So if you're impacted, you can open a claim 24/7 by calling your carrier directly. You can go online. You can usually file a claim online or by calling the 800 claims number for your particular carrier. In addition to that, that's always available. In addition to that, there are field adjusters. The adjusters are the folks that actually will come and meet with you and help process the claim and assess what's happened and cut the checks effectively or authorize the checks to be cut. There are field adjusters being flown in from around the country right now. The amount of claims is going to be completely overwhelming to everybody in the business, and so they're bringing them all in here, as many as possible, to be able to process these claims in a timely manner. And lastly, well, not lastly, but the other big thing insurance companies are doing is they're setting up temporary mobile claims centers.
mm,
Again, that varies greatly from carrier to carrier as to where they set up. A good resource to see if there's a mobile claim center that can help you would be to go to the website of your insurance company, and there's probably a pop-up or a news banner on the front page for those that are affected by the wildfires. Or you can also call the claims center, the claims department, and ask if there's any such centers. Sometimes those centers provide resources, some initial payments to help get you going. So it's worth looking into if you've been impacted.
okay. I'm gonna ask a dumb question, but I'm gonna ask it anyways. Because it's so much in the air in terms of how the fire started, does that really make a difference if it's wildfire versus arson versus a transformer blew? Like, does that actually make a difference, or is it just, hey, the house burnt down, that's all that matters?
Yeah, that is a good question. So, um, in general, no.
Okay.
So, what there is a difference, though, and this is a newer revelation in recent years, um, carriers have begun implementing separate wildfire deductibles on some policies. These are more common with like your non-admitted carriers. Your the ones that for harder to place, riskier areas.
Mhm.
Um, and so there are people up in the hills who maybe lost their traditional insurance, and so they had to go with a non-admitted carrier. Lloyd's of London, for example, is one that a lot of people are familiar with. Um, they In order to write in these riskier areas, what they would do is the homeowner's policy they write might have a $5,000 deductible. However, there's a separate deductible, and when there is for wildfire, it's usually pretty high. It could be $100,000
Hmm.
um, if the loss is caused by wildfire. Now, to your point, by different ways of a wildfire beginning, makes no difference. A wildfire is a wildfire is a wildfire, regardless of how it was ignited. But there is a difference. There can be a difference on your policy if your home was lost due to a wildfire versus, say, an internal fire like a kitchen fire or a short in
Mm.
your own home's electrical system, which would be more of an isolated incident.
Got it. Okay. So, and you've touched this a little bit already. So, if someone's home, unfortunately, they lost their home, and it doesn't matter if it's Pasadena, Pacific Palisades, whatever. The first thing they need to do is go to their carrier's website. They should have a banner there saying, "Hey, if you've been affected by the wildfires, click here," and that's where they start the process. Is that really the first step they should be doing after they've settled.
Yeah. So I'm going to give you a few different key things that I've been
Okay.
sharing with my clients who are going through this firsthand. Um, if you have experienced significant loss, and that could be a total claim, a total loss, your home is burned down. It could be your home is still standing in a neighborhood where neighbors have all been lost. Those areas, those homes that are still standing probably incurred a significant amount of smoke damage. So if you're in a heavily impacted area, maybe an area that you can't get back into yet, um, it is advisable to open a claim as soon as possible. The fact of the matter is the amount of loss, the amount of insureds that are affected is going to create a strain on the system, more so with some carriers than others, depending on who's writing policies in what areas. So I believe personally it's of utmost importance. Get a claim opened, get in the queue, because this is an extraordinary time. Things may take longer than normal. In a typical situation, you call to open a claim, the insurance company is usually in touch within 48 hours. And there are state rules as to how quickly the insurance company has to respond to a claim, but I think there are going to be delays just because there's not going to be enough resources to get to everybody right away. So get in the queue as quick as possible, I think, to get your process and your path to restoration moving as quickly as possible. So number one, open a claim. Number two, if you've been displaced, keep track of all of your expenses. Most policies you have has a separate bucket of coverage called loss of use or additional living expenses. And so that is a separate bucket of coverage, separate from paying to fix your home. That is there for you. And to simply put it, it will reimburse you for any expenses, reasonable expenses that you incur as a result of being displaced from your home. So the obvious things are hotel or shelter or renting a home. But it can also be replacement clothing. I talked to a customer, their shoes physically burned while they were running out of their community from the evacuation. And they said, Jimmy, can I buy a new pair of shoes? Yes, go buy a new pair of shoes. Just keep receipts. If you're in a hotel, you can't cook your meals. Keep receipts. That's going to aid you in restoration and getting you recovery. So just keep track of all these expenses while you're out right now. Super important. Um, for those that are in those bad areas, your home's been lost, or you're in a community where your home may still be there, but the neighborhood has been severely damaged. Be thinking about temporary housing. In those situations, it is common that you're going to be out for months. Could be, if you're rebuilding, could be a year or two, or even longer. Every situation is going to be different. And so a hotel is great initially. Hotel is not good long term. It becomes very costly, and it's hard to restore any type of life, standard, quality of life, and cooking
Normalcy,
and
whatever that might
normalcy.
be.
Exactly. And so it is common that insurance companies will in situations where you're going to be out for a while, to work to try to get you in some sort of temporary housing, short-term rentals, month to month type leases. And this is in great demand right now because you have to kind of put it, I like to put things in buckets. And so you have three different buckets of people right now that are being affected. You have people that have lost their homes, and that's what, 10,000 plus. Then you have all
Mhm.
the evacuation zones on top of that, tens of thousands more, if not into the hundred thousands category, right? And you have other people that didn't lose their home but are still locked out as well. Maybe that, so there's a big demand for people to find homes right now, and it's crazy. And you're seeing gouging and all the reports. It's awful. But
Yeah.
again, control the things that you can in your immediate circle. Begin thinking about temporary housing. Maybe talk with a realtor if you know one. I know one here on this call, Rick Albert. He would be a great resource to help secure housing. Um, but be mindful of that because I will say that whatever you think the timeline is going to be to get back into your home, if you're one of the heavily impacted areas, it's going to be longer than you're thinking. So long, short term, but longish term housing might be necessary for you. Um, Additionally, another thing to be thinking about is remediation. So remediation companies, those are folks that come in and clear out the damage. They're not necessarily the contractor that's going to rebuild, but before any rebuilding can happen, they need to go in and assess. And so, if you're in one of those homes that has extreme smoke damage, a lot of things are impacted. I have clients that, windows are busted. The exterior of the home is damaged. Smoke throughout the home, all the fabrics and linens, clothings, upholstery, furniture damaged. So a remediation company, they're teams that come in and will help to get that stuff fixed. So if your home has been severely damaged, it would be a good idea to start reaching out to remediation companies. So one of the national companies that works with a lot of insurance companies is ServPro. I'm not referring them, but they are one of the bigger national vendors that a lot of people tend to use and tend to be approved with insurance companies. I know Blue Sky is another one. There are a lot of options. There are a lot of local mom and pop places as well. I would recommend that you could check on Yelp or check with your neighbors and see if they've contacted any remediation companies as well. Again, there's going to be a huge demand for these folks. And
Mhm.
so getting in early, getting on their list, getting scheduled, even if your area is closed right now, start making these phone calls so you can start preparing because all these little steps now are going to help you and speed up the path to your personal recovery.
Now, you brought up something interesting in terms of like your rentals but you really need to compare it to what your policy actually covers, right? Because like I'm seeing a lot of requests from realtors saying, "Hey, I have clients they've been displaced. Their budget's 10,000 a month, $15,000 a month," which is a lot for rent. But it's like, what if their policy doesn't cover that much? So really shouldn't be people look at their policy. This is how much coverage I have. This is my budget, versus just, "Hey, this is what I can afford," or does it not matter?
It does. So reviewing your policy, if you're in an affected area, you really need to talk to your insurance agent
Right.
or insurance company. But if you have your copy of your policy, go look at the coverages. On the beginning of the policy is what's called the policy declaration, and it's usually the first two, three, 4 pages. And on one of those pages, it'll list your coverages. It usually starts with dwelling, known as coverage A. That's coverage to fix your house. Um, Coverage B is called other structures. That's to fix stuff around your house, like fences, pools, detached stuff built on your property. Coverage C is your personal property, all of your stuff, your belongings. There's separate limits allocated to each of these things. And then coverage D is loss of use, sometimes called additional living expense. That's going to be your limit. Now, with that particular coverage, insurance companies handle it differently. And you do need to check the limit. Sometimes the limit is provided in a dollar amount. You have $200,000 of loss of use. Some carriers don't list it. They say reasonable expense up to
Mm.
12 or 24 months being the most two common options. So yeah, you need to look at your policy. And what's important is you need to be reasonable. The insurance company is obligated to supply you with reasonable comparable expense or reimbursement. And so just as maybe a poor example, if you if you live in the Palisades, it's a very expensive area, right? It is not unreasonable for folks like that to maybe go seek shelter at the Four Seasons in Beverly Hills, which is a fancy, expensive place. One could
Mm.
argue that that is comparable and reasonable from residents in the Palisades to the Four Seasons in Beverly Hills.
Sure.
If, for example, you're in an area where it's the real estate market is a more reasonable number, like the Antelope Valley, for example, right? You have a 3 bedroom house. Well, you could not go to your insurance company and say we need to have a 10,000 square foot mansion on Malibu as our home in replacement. That is not what an insurance company would call reasonable. But a lot of these areas, I mean, you find a home that's comparable to yours, maybe not in your immediate neighborhood because they're damaged. But as an
Sure.
example, I have two clients in Malibu being affected. One went to Marina Del Rey and they're looking for housing there. One went up to Ventura and is finding housing there. And so it's just got to be somewhat comparable to where you were displaced from and within the limits of your policy.
Got it. Okay. Now, once someone files the claim, is probably going to be too soon. How long of a process is this going to be before they start saying, all right, let's start paying for construction?
Yeah. So filing a claim, the carriers are supposed to be in touch with you within 2 to 3 days.
Hmm.
Again,
Business
expect
days.
delays. Business days.
Okay.
Business days. Yeah. So expect delays. As an example, I filed a claim on Thursday for a customer with the California Fair Plan that had a total loss. Today is Tuesday, and they have not responded yet. But I have had other clients that have been reached out to by the Fair Plan for claims filed
Hmm.
around the same time. So they're getting to them. It's going to take 5 days. It's going to take 7 days. We don't know for sure, but we're going to do our best to monitor that and to make sure that these insurance companies are getting hold of our insureds. As far as the path to rebuilding, um, that's uh, the good news is in the event of a total loss, in the scope of different types of claims and how hard it is to adjust claims, a fire claim is relatively easy to adjust. That's a total loss because there's not a lot. It's fairly black and white, and generally something that's covered. Those of you that have had claims know that some claims can be real challenging. Water claims, for example, can be very challenging type of claims to adjust. Um, Fire's pretty black and white, and I think the insurance companies are going to start paying on those relatively quickly. Um, that said, my personal concern, and I'm not an expert in this space, but my personal concern is the municipalities allowing for the rebuilding to start, the permitting process. And I know I've seen stuff that there's been some expediting of stuff, and I think I saw the governor of California basically telling the Coastal Commission to go away and to not have all the red tape. As you're aware, if you
Right.
build on the coast in California, it's very, very challenging with the Coastal Commission and other communities and whatnot. They're supposed to be overridden pretty much from what I'm
Yeah.
hearing, but that information may be too early to be completely accurate. Um, so yeah, we're going to see, and think about the the impact on the construction industry, right? Obviously, it's going to be booming, but contractors are going to be in demand. There's only so
Right.
many materials, so there's a lot of factors in play that I think are going to cause more delays than the insurance companies themselves.
Yeah. Yeah, I mean I was talking to a contractor yesterday who builds a lot in the Palisades. And he's saying that he's been on calls with like engineers and architects because like he'll do new construction. So he has clients whose homes he just built burned down. And he's like, well, can we just use the same plans? And they were hesitant to even say that.
Yeah, it's tough. Building codes change
Right.
all the time, and building codes will absolutely change after a catastrophic event.
Sure.
After the earthquakes, there was a lot of building code changes. They're like, oh wow, the way that we have been building is not effective. Therefore, we need to change. And so I think especially in like a situation like with the Pacific Palisades, that is a heavily built up community in a precarious hillside that has lots of issues that they have to deal with, from the ocean to erosion to wildfires to earthquakes. There's a lot of things, and the community was caught in just a tragic situation that just erupted out of nowhere, and there's a lot of questions, as you're aware of, and most people are. A lot of people are asking questions. Unfortunately, there's a lot of finger pointing, which is really kind of disheartening. But the infrastructure needs to be adequate before the rebuilding. And so I'm sure there's conversations being held about that, but there's no doubt that there's going to be decisions that have to be made as far as rebuilding or correcting or improving existing infrastructure, and then there's going to be building codes for the actual homes. Come to my mind, I believe a buzzword that we're all going to be hearing of a lot in the coming years is going to be home hardening. That's something that the insurance industry has been working on for quite some time, and those are proactive steps that you can take both in the design and architecture of your home to be more fire resistant, but also the surrounding areas beyond the standard LA County brush clearance requirement, landscaping ideas and stuff. So it's hard to see because on one side you have the municipality saying we're going to rebuild and we want to rebuild quickly, but then you also have to stand back and think, well, we have to rebuild smartly too, so that we don't
Right.
repeat this same situation again. So we'll see. I mean, it's too early to tell, but these are the things that have been going through my head.
And well, and you lived in LA all your life,
Yeah.
right? Yeah. This is the first, like, I've never really thought of Pacific Palisades as like a major fire area. Like, yes, I knew the hillside, but you always hear like Malibu, Topanga Canyon. You don't really hear much about the Palisades. So when this whole thing erupted, even I was a little surprised. So to your point, in LA County, you have to do the fire hardening inspections or yearly. And so it'll be interesting to see what happens going forward. Um, but you're right. It's like, okay, well, some of these neighborhoods that maybe were in the flats of Palisades or the flats of, Altadena and Pasadena, because those were a lot of those homes were affected, but were in the hillside. They might have to start thinking about that. I'm in the flats in the valley. I might have to start thinking about that because it was just a few blocks away that they talked about doing evacuations.
Agreed. Agreed. Because what we're seeing is um, a lot of the homes now. These fires have been unique. Palisades is a dangerous area. You
Hmm.
yourself may have not perceived that, but I can tell you firsthand, especially post Woolsey fire. We
Hmm.
had we had a round of fires in California in 2017, 2018, maybe a little bit 2019, that were devastating. That's when the Paradise Fire happened. Woolsey, Thomas,
Sure.
really big fires that impacted California, and the last really big one since this last week. Um, I can tell you firsthand, being an agent that sells policies in our community, the
Sure.
insurance companies have very quietly been pulling out of the Palisades and
Oh,
virtually
interesting.
everywhere north of Sunset
Hmm.
since the Woolsey fire. And the mappings have changed, and that's the interesting thing, and we're going to be seeing how it's going to play out is when these insurance companies pull out, that leaves one option for majority. Well, two options for a majority of these homeowners: the California Fair Plan or no coverage, aka self-insured. So they've known about the Palisades. It's been identified as a risky area, even though you don't feel like it. It has been, and again, a lot of those claims in the Palisades are all going to be fair plan claims. Topanga is almost 100% fair plan. I would say, Palisades, I'm guessing, but I wouldn't be surprised if it was north of 80% of all homes
Yeah.
on the fair plan there. Yeah.
So for those watching, if they're not familiar, the California Fair Plan is basically the state insuring because nobody else will. Is
Yeah,
that kind of
known as
what
the
it is?
insurer, known as the insurer of last resort. So it was set
Right.
up through an act of Congress. One common misnomer or misunderstanding about them is the Fair Plan is not funded by the government in any way, shape, or form. Not one single
Okay.
taxpayer dollar goes to the California Fair Plan. It is 100% self-funded and has to be actuarially sound, just like a regular insurance carrier. That said, they have taken on a tremendous amount of risk since 2018. The numbers have grown, and the usage of the Fair Plan has exploded. And so we are in real time going to be experiencing the ultimate stress test of the insurance company of last resort for our state.
So basically, the California Fair Plan, it's ran by the state, but it's self-funded. It's like as if it's its own insurance company.
Effectively, yes,
Yeah,
yeah.
got it. Okay. Is there anything else we need to be aware of? Because, homes are still going to sell. California Fair Plan. Like I was looking at a property and I was like, okay, this is probably California Fair Plan. It's just kind of going to be the default. But do we think something's going to change or is it just going to be business as usual? I mean, it's too early to tell, but just to give a idea.
Well, part of the challenging situation is we have been in an extremely hard insurance market for the
Sure.
last several years. And what that means is um, a majority of the insurance companies that we all know of and are familiar with or play a lot of commercials on our TVs, they have been shut down from writing any new policies in the state for quite some time now. State Farm, Allstate, Farmers, Nationwide, Liberty Mutual. I mean, Progressive. The list goes on. A lot of companies shut down, or they limited their capacity so much that it's near impossible to write a policy with them. And so, um, that has been an insurance crisis that we have been experiencing ourselves, and the consumers have too, because it's resulted in higher rates and challenges to even secure insurance. And
Hmm.
so there have been legislative actions going on behind the scenes between the insurance companies and the state regulators to correct this market. And there was a path that we were on. There, the insurance commissioner and the governor have been releasing updates saying that there's legislation that is being put in place to help the insurance market recover and reopen. Um, Unfortunately, I think that these events that happened are going to delay that. They're going to have an impact.
Sure.
It's too early to tell exactly how, but I believe the insurance companies are going to come back. They are. Catastrophic events happen, and this is in our neighborhood, and this is awful, awful. I mean, it's probably going to go down as the worst fire event in state history. But catastrophic events happen in other parts of the country too. Sometimes they're tornadoes, sometimes they're hurricanes. We had Asheville, North Carolina. I mean, devastating communities wiped out, similar to ours. And it hurts and it stings because this is our home and our community right now. But these catastrophic things happened across the country. The insurance companies still continue to operate in most situations. I believe that the market is going to recover. I believe that companies are going to come back into the state. Um, I also believe that it's going to be at a higher price, and that's what it's going to come down to. It's going to be a function of price.
Yeah, it's interesting because I started doing with all my properties, I started doing higher deductibles because I'm like
Oh
the
yeah,
amount of effort. First of all, it's like you file a claim, that's going to follow you anytime you buy a new property, and then when you go to sell your house, that stays with the property. So like you're kind of screwed on both ends anyway. So it's like, well, I might as well just do a higher deductible, lower my expense on my insurance because like, okay, if there's $7,000 worth of damage, am I going to go through the effort of insurance or am I just going to pay it out of pocket? Now, of course, you have to make sure you have the savings for it. But I'm curious
yeah.
because
I
go
mean
for it.
that right there is a whole different webinar.
Sure,
But
right.
just an anecdotal story. My good friend here in the West San Fernando Valley was affected by, I guess it was one of the looters or just a random burglary. Their house was broken into on Saturday night, or no, it was
Hmm.
Friday for early Saturday morning, Friday night, Saturday morning. They were home, and someone broke into their garage at about 3 o'clock in the morning and took a bunch of stuff, power tools, took their kid's go kart that he just got for Christmas that Santa brought him, bicycles. And so I don't insure him, but we're good friends. And he called me up, and I said, "Well, um, do you know how much approximately everything cost?" And he said about $5,000. Okay, well, what's your insurance deductible on your policy? $2,500, which is a very common deductible that most people
Hmm.
tend to have these days. Okay, so your max benefit is going to be $5,000 minus a 2,500, maybe $2,500 coming to you from the insurance company. Given that the insurance market is so stressed and there's so many carriers that are just simply not writing business and scrutinizing claims, it may not be in your best interest long term to file the claim. And so we
Yep.
do encourage, we never want to discourage people from filing a claim, but we do want them, you treat it like a business decision. You want to have all the information in front of you so you can make the best decision based on the information you have. And
Yep.
so, and all I can share is, if it were my claim, here's what I would or wouldn't do. And I told him in that situation, I probably wouldn't file a claim because
I
he actually
agree.
has State Farm, Well, State Farm's closed. So he couldn't go and replace it. If State Farm decided to cancel him because of claims history or increased exposure, he's going to be in
Yeah.
a tough spot. He can end up paying $2,000 more a year for a replacement homeowner's policy. Right. So it's
Yeah.
awful to have these conversations. I mean, it's awful to think the idea that you'd be penalized for using this thing that you pay into, but that's
Right.
just the harsh reality of things. And we don't have to like it, but it is the environment that we're in.
So then how do we address, because one of the big things that people aren't necessarily talking about because they don't know is you have a home, say, I think Pasadena is probably a better example. You have these homes built in 1800s, 1900s. Building codes have significantly changed, which means the cost of building has changed, which ultimately means people might be underinsured, right? Because they're looking at what's the cheapest policy. Like I was reviewing a policy recently for someone, and her limit was like 500,000 was like for replacement costs. I'm like, okay, that's about $200 a square foot, but it's going to cost you $300 to $400 a square foot to build.
Yeah.
So you're underinsured by a lot, few, potentially hundreds of thousands of dollars. We saw it in Laguna when those fires happened. There was someone I had met who was short like $600,000. So
Yep.
what happens to those people that are underinsured?
Um,
The answer could be SOL, by the way. Like that
yeah,
could be the
it's
answer.
it's tough, and these are questions that you don't want to ask after a loss.
Right.
You can't place your bet on roulette after the ball stops,
Yep.
right? And so, it's a complicated question. Here's a couple of things I can recommend. Number one, you got to review your policies and coverages. Don't assume just because it's paid for by your lender or you cut a check once a year that you're covered. I'll tell you anecdotally, um, 15 years ago, I've been doing this now for over 21, 22 years now. I don't know how long. I'm old. I've gone gray from this business. Um,
Well,
but
for the record, when I first met you over a decade ago, you were still gray.
Not this gray though. Not
Okay,
this
fair
gray. But it's
enough.
come along quite a ways. I know. But you know, but back then, for we're talking like average track homes in Southern California
Yeah.
because they're all built relatively the same. We used to in insurance use like $1 per square foot average.
Hmm.
About $150 a square foot to insure a home in the valley. And then, 10 years ago, the carrier's saying, well, we're seeing that, for homes that had to be rebuilt in those areas, it's actually costing, 225 to $300 a square foot. Okay, so gone are the days of the 150. And that said, we do use software to help estimate this, but my belief is that software is even reporting low reconstruction costs. And so now, then we go through the COVID era, and inflation has just hit us like crazy in all facets, including construction costs. And so now we're in a situation where average reconstruction in Southern California, you're looking at 300, 350, $400 a square foot on average. I have a friend that built an ADU, standalone ADU. His costs were about $500 a square foot. I have a client
Ouch.
up in Topanga that spoke with an architect, and they said up in Topanga, because of the complexities of being a hillside community, they would estimate not less than $700 a square foot.
Right.
And so when you're looking at those numbers, the majority of people are underinsured. Now, there are provisions in the policies that may help. You mentioned building code. There is a separate coverage in most policies called ordinance or law coverage, and it's an additional sum of money to help you cover the cost of additional building ordinance or changes to your reconstruction from what was originally there due to building code change. There's
Hmm.
extended replacement cost in a policy. That's a dangerous one because it's a flat percentage, like 25 or 50%. Say you have 50% extended replacement cost. So you have $1 million home policy with 50% extended replacement. Well, that you think, oh wow, the insurance company is going to pay up to 1.5 million to rebuild my house. Maybe not, because there's clauses in the contract that says you can't rely on the extended replacement to to combine with your dwelling coverage to equal what it's really going to take to rebuild your home. And if we find that you did that and you are truly underinsured by a certain ratio, that clause can go away and all that extra coverage could disappear. So it's dangerous. And some people sell insurance that way, saying, "Oh yeah, you're good with the extended replacement cost. You got more than enough." That's not what it's for. The extended replacement cost is really truly designed for this situation right now, where a home's dwelling limit should be insured to the full replacement value. But because of the extraordinary circumstances of rebuilding so many places all at once, there's going to be inflated costs that cannot be avoided. And so
Good
extended
point.
replacement cost is to help buffer or that surge in pricing that may occur just purely because of the limitation of resources.
And so the software you're using, I forgot what it's called, it's like Swift and something, Swift and Marshall, right? Is that what it's
Yeah,
called?
and Marshall
Marshall
Swift
Swift. There you
is
go.
one of the bigger ones. Yeah.
So do they look at just the average for a county?
No,
Is that how they actually
no.
do go down to the zip code? Because my issue is, Pacoima, the price per square foot can be very different than the Palisades. Forget if it's hillside. It's just they're higher end finishes,
Yeah.
right? Because it's a different clientele, it's a different build.
Mhm. Yeah, yeah, yeah. So I don't know if it goes. I mean, I would say zip code at a minimum. It may be more
Okay.
granular than that. I
Mm,
as well.
okay.
But no, it does take that into effect, and they're supposed to be, they're supposed to be in the know of what construction costs are in the different areas that they're providing that service, that valuation tool. And it is
Got
an
it.
estimate. It is an estimate, and I find it to be inadequate because I can go run a Marshall Swift replacement cost estimator up in Topanga right now, and it may give me $300 a foot. And I even built it out to put in all the finish and quality and materials, etc., that you mentioned. But that architect who lives up there is going to know a whole lot more about real world rebuilding versus software, right? It's kind of
Right.
like in your world, it's like the Zillow's estimate, right? Yeah, it gets you there, but it's missing a lot of stuff too, and a lot of
Right.
accuracy because of the nuance involved in it.
Yeah. So, which makes sense. So, like, and I've talked to some people, and what I've been suggesting is go ahead and get started on some of the building process, right? Talk to the architects, start getting that stuff started so you can, to your point, get in queue with the city because it could take, I mean, honestly, it could take a year before you even break ground.
Easily.
So, at what point would the insurance companies, and again, every insurance company is different, I guess where do we draw the line in terms of what they're willing to reimburse for? Like, can I show them receipts and say, look, I've already paid for an architect, I've already paid for soils report, I've already paid for all these things, versus, oh no, 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 we're not going to start paying until X point. Does that make sense?
Yeah. So there are certain payments the insurance company is obligated to do. And again, we're talking in like a total loss type of situation, right? Where you
Hmm.
have to rebuild. That's a little more cut and dry. The insurance
Hmm.
company should move rather quickly. In fact, I will again, speaking anecdotally, because we don't know
Sure.
how the carriers are going to respond in this situation. But
Yeah.
I had multiple total losses that I personally helped clients with in the Woolsey fire. And the Fair Plan, for example, they honestly did a bang up job of adjusting claims in the fact that if it was a total loss, they literally just cut a check for the entire policy limits and said, "Have a nice
Wow.
day. We fulfilled our obligation." And in my mind, you really can't ask more of an insurance company. They have completely fulfilled their obligation of that insurance contract up to the top limit possible, right? And so I'm not saying that's going to happen. In fact, I'd be surprised because there's questions as far
So
as
many.
claims, so many and whatnot, much bigger than Woolsey. But yeah, I mean, for total losses, I would anticipate the insurance companies are going to be pretty quick on these payouts. They have to. They have to.
Yeah.
And usually they've had a pretty large sum up front for the rebuilding. If you have again $1 million policy, they may release four, five, $600,000 up front to get things moving, and you got to use that towards it. And then as you hit that limit and as costs start to build up or get close to that limit, you're in constant communication with your insurance company. If you have a mortgage, you got the lender involved too. But you're working on a team on a project, just like a project plan. I know Rick, you personally have been involved in lots of construction projects, right? And so,
Yeah.
you build, you draw funds, you build, you draw funds, there's an overage, you go back to the bank, and so there's going to be a lot of that back and forth as people are rebuilding.
Yeah. No, and that makes sense. And we also keep in mind, like, especially in like the Palisades, some of these homes are much larger, right? The average size home might be probably, well, I know on the building side, they used to be like 4 to 5,000 square feet. And then obviously we have like, was it the Riviera, where it's like these massive estates.
Hmm.
So they're going to need some of that money up front just to
Yeah.
get started. Because it could be 30, 40 grand just in architectural.
Yeah, yeah, yeah. And quite honestly, I think, we don't even know how long these communities are going to be closed for. There were some
Yeah.
communities in Woolsey Fire that were closed for upwards of 2 weeks. There's a lot
Mm.
of debris. There's a lot of infrastructure, utility, repair that has to happen before they even get opened up. So my hope is, as we will start to get more clarity as to what the insurance process is going to look like, and what kind of issues the municipalities are going to put in front of us as well, what kind of hoops we're going to jump through um, around the time that things start reopening. That's my hope, but
Right.
we'll see. This is unfortunately a really large experiment that we're going through, and the outcome is unknown.
Yeah, and part of that, he's mentioning experiment. Do we, and it's totally speculative, because when you and I spoke yesterday, you brought up an interesting point. There was parts of like Altadena that they're not considered to be high fire zones.
Correct.
So is that going to change? I mean, I know you're not head of the insurance, you're not the insurance commissioner, so this is just Jimmy Lewis. But like, because that was one of my big fears with my home. It's like I'm not in a high fire zone, but the fires just sure started getting close.
Yeah.
And I didn't know if that was going to change anything.
Yeah, yeah. It will. To what extent, I don't know. I mean, it was interesting that many parts of the communities that were damaged or destroyed in Altadena were, from an insurance carrier perspective, low to minimal risk
Right.
on the wildfire score. That is not the case for every single location in the Palisades fire. That is all
Right.
high risk area, and everyone's known
Got
it
it.
has been. But Altadena is interesting. I mean, some of those homes are built, I think, maybe turn of the century, late 1800s, early 1900s,
Yeah.
over 100-year-old homes. They have been through so much, storms and catastrophic events and earthquakes, fires, and those communities have been there. This one took them out
Yeah.
in a grand scale. So are we going to see? Probably. We definitely saw, before Woolsey fire, and I refer to that a lot because that's a real life example. That's the most
It's the
similar
closest benchmark.
experience. Yeah. Yeah, the insurance companies did an about face and they all tightened up in certain areas. The thing is, there's
Interesting.
not one set of hard, fast rules. Each insurance company sets up their own rules as to what they'll accept or what they won't, or what they consider high risk or not.
Okay. That's good to know. So it's just this is definitely a wait and see period.
Yeah, so getting the marketplace reopened again. Remember, we in the insurance side, we have two crises going on. We've had this ongoing insurance crisis within our state for the last several years, where so many carriers are just simply closed, and now
Hmm.
we have these fires too. So I mean, it's really a double crisis for insurance. The path to recovery is going to be working not only to rebuild the communities, but reopening the insurance market. The regulators working closely with the insurance industry to make the concessions and changes that are necessary so that the carriers can operate in a sound way where they can collect
Hmm.
adequate premium to pay out the claims. That's what it comes down to.
Okay. Now, because there's going to be a lot of people making phone calls, shifting gears a little bit. I've been hearing, and you even brought it up, there's going to be a lot of scams that are going to be happening.
Yeah, yeah.
What are we seeing there?
So I would just my personal warning that I've seen firsthand is beware of scam artists.
Hmm.
Two specific areas as these neighborhoods reopen. Be wary of people offering services to help that are knocking door to door and going through your neighborhood. Specifically, remediation companies, and
Mm.
public adjusters. Public adjusters are different than insurance claims adjusters. Public adjusters are independent third parties that will work as an intermediary between you, the homeowner, and the insurance company. And let me just say that both those industries, public adjusters and remediation companies, have a very important and valid purpose to exist, and they do provide value. However, I have also seen a ton of scammers, ambulance chasers that operate in those businesses as well. Just make sure, trust your gut. As I get older, one of the things that I really have just learned personally is trust your gut. If your spidey senses are up, be wary. Don't sign anything. This is an emotional time, right? Don't commit to anything right now without
Yeah.
sleeping on it. If public adjuster or mediation company, when your neighborhoods reopen, come knocking on your door and telling you they're going to get you a whole new house or this or that and promising stuff, be careful. Like public adjusters, on average, they'll charge you 20%. These fires should be pretty open and shut claims where they're going to work to restore you. If you sign on a dotted line for the public adjuster, they could be taking away 20% of your payout from the insurance carrier that could be going towards restoring you and your family's life.
Which we
So
just discussed are maybe underinsured. So now
they
you
may
just
be
made your situation
underinsured. Every
worse.
penny is going to count. So again, I don't want to completely poo-poo on those people,
Sure.
but be mindful because there are a lot of scam artists that are not reputable. So when it comes to working with those companies, make sure you check with reviews. Consider using sources that are trusted referrals from your community or from your network. Yelp sometimes. I've had some, consider doing business with some people where it sounded good, and then I go home and I do a little bit of Google research, and I'm like, oh, that seems like a bad outfit. There's a lot of complaints and concerns. Stay away. So just trust your senses. Don't
Hmm.
commit to things on the spot, and watch out for people come in your neighborhood trying to offer services. Be not to say that there's not going to be valid, honest people trying to help, but just be wary, be on alert.
And to your point, you may not even need them.
Mhm.
Not that I don't want people working, but it's just kind of like if it's pretty
For
clear,
these
it's
total
like
losses, for these
just
total
show the news
losses, you really
reports.
shouldn't. These total losses, you really shouldn't. And me personally, being an insurance agent for as long as I have, I'm a broker, which means my alliance is with the insured. I'm not employed by any one insurance carrier, and I don't drink
Hmm.
the Kool-Aid of these companies. Um, and my honest opinion is allow the insurance company to an opportunity to do what's right in your claim. If they don't, then you can consider those services. But personally speaking, two of the worst claims that I have ever personally experienced with my clients have been ones where there's been a situation like this or smaller, but like a kind of a mini catastrophic situation, and someone knocked on their door and they signed up with a public adjuster before even opening the claim. And not to say again that it's not valid, but personally speaking, those two claims were nightmares for the insurance company, for the insured. It was just, I can tell you there was regret and remorse from the client in engaging with those folks so early in the process when the insurance company would have likely done what they were supposed to do, anyways.
It kind of reminds me of like if your car's a lemon, it's like, do you go straight to a lemon law attorney or do you try to work it out with the dealership first?
Yeah, those lemon law attorneys aren't there just to quote unquote help you. They're marketing for business because they get a cut of it.
Yeah. Yeah, I
Yeah,
had a lemon. I just worked straight through the dealership. I didn't bring an attorney involved. The
yeah,
dealership handled it.
yeah, and that's
Saved me a few
great. So
thousand
you probably
bucks.
benefited. And I don't know what it looks like on the lemon law side, but yeah, I mean, but the public adjusters, they're not
Yeah.
working for free. They're not working
Right.
for free.
Right. Okay.
Um,
Uh,
so
uh,
two other things I want to say just real quick.
sure, go for it.
There are a lot of people with the FAIR Plan and these days, and a lot of the people that
Hmm.
have been affected have FAIR Plan. Here's something that's important to know: most people that have the FAIR Plan as their source of fire coverage, they have two policies, more than likely. At least if they worked with an agent like me. You have the FAIR Plan, which provides your basic fire coverage, but then you have like a wraparound policy known as a difference in condition that provides other coverages. A lot of people are confused. Do I have fire coverage? For those people that have FAIR Plan, it's important to note that if you've sustained damages due to these wildfires, it is going to be the FAIR Plan policy and not the supplemental one, not the difference in condition or wraparound policy that is going to provide your coverages. The fair plan should be the one that you file the claim through, and the coverages listed on that policy are going to be the potential coverages available to you. I cannot think of a situation in these fires, if you sustain fire damage, where that supplemental policy is going to help you. That policy helps
Hmm.
with things like water damage or theft or liability matters, does not cover fire. So if there is some confusion, if you use Fair Plan, that is the policy you want to make a claim on. Um, Other than that, there are a couple of other resources that I think have been providing value to all Angelinos. There is a website called 211 LA
Okay.
that provides information and resources for people who have been displaced or are victims of this fire. I know through that 211 LA, there is a program that was set up between Airbnb and the city or county of Los Angeles, providing vouchers for temporary housing. I don't know the status of it at this moment, but I know that there is information about that as well as other resources. Another website, LA County Recovers, is another important website. Um, that site is, it's actually recovery.lacounty.gov. Um, and that has a whole host of resources, including information and ways to apply for assistance through FEMA. So those are two websites with a whole host of valuable information and resources above and beyond the insurance stuff that you and I have been talking about.
Okay, good. Yeah, you're just about to get to my next question about resources. So I appreciate that. Is there anything else, that people need to be aware of, even going forward? We've
You
covered a
know,
lot.
there's a lot. There's a lot. So here's one thing I put out, and you know, if you have questions about your insurance, you should contact your insurance agent, your insurance company. There are situations where people can't get a hold of their agent. They don't know who to call. They're unsure. I will make myself available. I cannot advise on your particular policies if I
Sure.
don't write it, but I can provide some basic information and resources and try to get you pointed in the right direction if you're unable to get resources elsewhere. So, Rick, I don't know if you want to, post the information or not, but I can
Yeah.
be reached. My phone number is 818-805-6706. And being someone who's in the community, I will do my best to just make myself available and help in any way possible to get you moving forward and get you up out of the ashes.
Yeah, we appreciate that. This is really unprecedented time. So,
Yeah,
um, all right. Well, thank you so much, Jimmy, for doing this. We're trying to put as much together. I'm trying to set up other interviews for different processes, permit expediters, things like that, to try to help as many people as we can. So I really appreciate you doing this. And yeah, that's about it for me.
great. Thanks, Rick. I really
So,
appreciate you and
yeah,
everything you're doing.
absolutely. Thank you so much.